Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you for joining us here for this version of our market quarter. It's a market quarter there, combining, making up my own words. No, we are transitioning into the fourth quarter here, and it's October, believe it or not. So we're going to start off this week, and we're going to cover the big news out of China, which really jump started several corners of the market, and then take a look at September, which was a nice move when compared to seasonality. So let's start right off here by talking about Chinese economic stimulus. The Chinese, if you didn't catch it, really brought out their bazooka. But the reason why you can really see here on this chart in a couple of different ways. One is the Chinese consumer confidence, which has really plummeted, as did a lot of places post COVID. But unlike a lot of other areas, China's consumer confidence never really rebounded. And so their economy continues to deteriorate, which you can also see in their economic activity indicator. Data out of China is always suspect when you look at things like GDP growth, et cetera. But the data that we do get is clear and has been pointing to really weakness in their economy and acts as an overhang to many other emerging markets. So that's really the backdrop for why the Chinese acted so heavily. And I'll turn it to Andrew here to cover some of the market implications.
Sure. So looking at what happened after China announced this economic stimulus plan is we saw a massive response in the stock market as we expected when you have any type of government announcement. But what happened, what was so unique about this announcement was, as Adam said, the economy for China has been struggling. Their stock market also hasn't looked great. On this chart here, we have the Shanghai CSI 300. You can think of that as a similar index to the S&P 500. This is looking at the 300 largest companies on the Shanghai exchange, and it was down about 45% at its low point. Actually, it's actually performed much worse. Back in '08, it was down over 75% at one point. And so we see a lot of volatility comes into the Chinese equity market. But coming into the announcement, their major index, their kind of version of the S&P 500, hit the 52-week low, the lowest price it had been in a closing basis in the last year. Then they made this announcement, and bam, it was the highest price this index has seen in the last year. A huge response. This index rose 15% in 1 week, something that we've only really seen happen for this index two other times, and that was during the financial crisis in the middle of it and then right towards the end of it. And so we went into a lot of great detail in our allocation meeting, looking at the things we're watching internationally as well as specifically in China for certain price levels we're looking at. Why we continue to be a little bit cautious and leery is we've seen this story before. We've seen them make these types of announcements where they're trying to stimulate the economy, and it always doesn't flow over to the stock market side. Something Adam and I talk about a lot is trying to really separate the focus of what's going on in an economy and what's going on within a market. And sometimes they do interact, but we don't want to confuse them as being the same thing. And so we are watching going forward. Do we start seeing flows back into Chinese equities and looking for opportunities within the models that we manage in your portfolios as well? So now bringing things back home, bringing them back to the U.S. market, something that we've spent a lot of time talking about over the last month or so is looking at seasonality. August and September have historically been rough months for the S&P 500, looking at domestic markets now. And as we put the close to the September month, we can see that we actually had a positive return for September. It actually closed over a percent higher. And so we saw the bucking of that negative seasonality. And this can actually be more telling and more significant than when we see seasonality trends be followed. And so looking at the historical data, what we do every single day is trying to find past instances to see how does the market respond to this type of shift out of what's typically a bad month. How does the market go forward? And so I ran the study going back to 1980 and said, what have been some prior years where the market was up over 10% like it is this year, and then it had a positive September? And there hasn't been a lot of them. You can see the blue lines on that chart show each time this has happened. The commonality of these is the market has historically continued to go higher. Of these times, there's only two that actually saw the market pull back from there. You can see them if you look all the way to the left of that chart in the 1980s, where the market did retreat after having a positive September. Traditionally, the market has been positive for the next 3 months to close out the year. The one caveat to that is when we do look at markets that are really, really strong through September, up 20% like we are right now, October can be see a little bit of expression of relaxation in the market where that rubber band gets a little stretched. And October sometimes can bring a little bit of volatility. But when we look a little bit longer term, not getting too short term focused, that traditionally the rest of the year does remain positive. And so this is encouraging that we see the market take a time that bears could step in, that sellers could really take control, and we didn't see it happen in September. And we can look at many different reasons why, but we're encouraged by the fact that we did buck that negative seasonal trend, and now we're going into the fourth quarter, which historically has been, for the full 3 months, a positive time for domestic U.S. equities.
Yeah, thank you, Andrew. Thank you to all of you for giving us this time, and thanks to you sending so many of you out to the Thoroughleys. That's been great. And if you didn't get the chance to come see us, hopefully you have a chance to watch the virtual version that comes out on Friday. As always, if we can be of service, please don't hesitate to give us a call, 800-928-4001, or scan the QR code. And thanks again, and have a great weekend.